Hey everybody, it's Bob with Trade Genius. I have my good friend Phil with me today. Do you guys think the market is overvalued? Have you ever seen a blow off top? We're going to show you what one looks like and what may expect this summer. Stay tuned.
Trade Genius.
Everybody, is Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have a chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Okay, Phil, before I turn it over to you, I just want to pat ourselves on the back a little bit. Can you throw the SIM chart up? I just want to show people we get a lot of questions about how our system works and why, what we do is we don't rely on our own judgment. We rely on the algorithms. And what we have here is a downtrending stock SYM. Okay, you can see the resistance band as it's following down. It's basically saying, you're in sell the rip modes, but there are opportunities when momentum shifts to take advantage of these counter trends for 3 and 5, 6% moves. And we jumped on one of these yesterday here. Just want to show you. So down below, you can see where the color shading goes from like a pink to a light green. That same momentum has changed. That blue line is basically a 5-day momentum rate of change indicator, which should tell you, hey, there might be a change in character here short term. And then we have the famous worm, okay, that was flashing ahead of both those that said there's probably an opportunity for a long trade. All three of them hit. We jumped on the trade. Right now, we're up 5%. We're trailing right now, Phil. And because we're counter trend trading, because it's underneath that band, we'll sink that stop up tight and probably take our profit today. You can make a 5% move in one day. You don't get greedy. You take profit and you wait for the trend to change more secularly, then you can ride those trends longer. So I want to show people that we do this all day, every day. Reason why our track record is so good. And there's plenty of opportunities out there every day. Even if the market is downtrending, you get these kind of opportunities. So with that, Phil, I don't know if you want to comment on that, and then I'll take it to you to talk about, blow off tops.
Yeah, so our next chart is what we call a spaghetti chart because it throws a bunch of lines together. So I'll explain the chart here. We have 4 different lines, different colors, and what they are is they're taking the performance of the S&P 500 through various years, mostly 5-year increments. And you got an example in orange of the performance in 1924 to 1929. So obviously leading up to a Great Depression. We have then 1963 to 1968. That's the greenish color at the bottom there. Its performance during that 5-year span. We have in blue 1995 to 2000. That is the dot-com bubble. We've often said that, this whole AI thing is like dot-com bubble 2.0, and that's in blue. The run up to 1929 and the run up to 2000, very similar performance. And then finally we have in that pinkish fuchsia color S&P 500 2019 to 2024. And as you can see, it's lagging quite a bit. So basically what it's implying is that you could see a move up, not quite a double from here, but you could you see set 50% more or 25 or 75% more? Sure, you could. Relative to blow-offs that we've had in the past that run up into, economic problems. The chart is normalized so that it starts them all off at 0 essentially, and then you compare the performance. So the price on the right is what the normalized SPY price would be, just to give them all kind of like a comparative value. Obviously SPY is trading much higher, but this just shows you that we're not there yet, right, in terms of a blow off. And if you look to the last couple of cycles that we've had a recession, what happens is the market runs right up into the rate cuts. Okay, so telltale sign is a sharp increase in rates and then a pause in rates, which we've had one of the longest pauses now here. And remember, when we paused, we said you're not going to get another rate hike. That's not how these cycles work. They go from an extremely fast hike to a pause, and then the first thing you get after that is a rate cut. And the rate cut typically is dependent on the unemployment rate creeping up and jobs. So, and that's the next thing that we're looking for. And unemployment rate actually has triggered, as we mentioned, right? Once you get that 0.5% up off the lows on unemployment and it's doing a rounded bottom and it's not some sort of anomaly, that's telling you that the ship's turning, right? So now the next thing we're going to be looking for on the unemployment rate is these jumps in the unemployment rate. And as we start to see that, then we'll start watching for the move up beyond 4.5 up to 5%. And then we're going to be extremely close to a Fed rate cut. It's like clockwork, guys. So, you know, that's why I was guessing maybe September for the rate cut at that meeting for the FOMC. This is the part that's dynamic. You know, if it jumped up extremely quickly, you could get one as early as next month's meeting in July. And if it's taking its sweet old time, then it'll have to be December. But, you know, I'm going to pick the middle and say September, Bob. In the meantime, I think our pink line is going to try to make a move to catch up to the scenario leading up to 1929 and the scenario leading up to the dot-com bubble.
I know. Good news, terrifying news. And tomorrow, we're going to show you why these unemployment rates can go up fast. Some really scary stuff happening out there in the corporate world. We'll wait for that till tomorrow. The good news is that we think a blow-off top is coming. And, you know, it's like, you know, storing grain or making hay while the sun shines. You may have a time in the period where, you know, where making money is going to be harder to come by. And so, you know, you want to take advantage of it when it's moving. Don't be too cautious when it's giving you these opportunities. And I think, Phil, maybe on Saturday, maybe we'll talk about some of the ways in which we're going to hedge that can give us some pretty really interestingly high returns with low volatility. And so stay tuned for that. And in the meantime, go check us out at tradelikeagenius.com and trade stocks with us, trade cryptos with us, trade the whole Bitcoin, what I would call ecosystem here with the proxies and the miners. And I think you're going to be able to put yourself in a position that you'll be making more money than the professional managers, because there's some tremendous opportunities that other people aren't following, that are afraid or don't understand, that could put a lot of money in your pocket. And we'll share with you how you can do that. With that, Phil, I'm done for the day. Thank you so much. Catch you guys tomorrow.
Trade Genius.